Let's talk about how to shop for the best interest rate for your home loan. Now, when talking about shopping for interest rates, the best rate isn't always the best deal if you're paying thousands of dollars in extra lender fees just to get that rate. So when comparing loan options, you want to look not only at the interest rate, but also the fees and terms associated with that loan quote. In this video, we're going to discuss a disclosure called the loan estimate and why it's crucial for home buyers to have a basic understanding of this document if they want to ensure they're getting the best interest rate on their home loan with the lowest amount of fees. The loan estimate is a 3-page document with pricing guarantees built in that require the lender to match all loan costs in the loan estimate when you close on your home purchase or reimburse the buyer for any differences. So guys, the only way to really know which lender has the best deal on your home loan is to compare loan estimates. Without your loan estimate, there are literally no guarantees, and there's no way for you, the consumer, to know if a lender is trying to play a shell game with their loan cost and fees. For this video, I'm going to use a sample LE I downloaded from the Consumer Financial Protection Bureau's website. At the top left, you'll have your lender or the bank that's issued the loan estimate. On the top right, you see save this loan estimate to compare with your closing disclosure. Guys, this is where your pricing guarantee comes in. You'll receive a closing disclosure 3 business days prior to closing on your home purchase, and all loan costs must remain the same from your loan estimate, or the lender is required to make up that difference. Then you have the date the loan estimate was issued, the loan applicant's property address, and the sale price agreed to in the purchase contract. Moving on to the right, you have the loan term, or how long you will be making payments on the loan before it's paid off. Then you have the purpose of the loan. For example, is it a home purchase or a refinance? The loan product will either be a fixed or an adjustable rate loan. For loan type, is it a conventional, FHA, VA, or maybe USDA loan? Then you have the loan ID number assigned by the lender. The rate lock will indicate if the interest rate is locked or not and how long the locked rate is valid for. A couple of very important points about the rate lock. The first being, if the rate is not locked, this loan estimate is not going to be very useful because the interest rate could change on you tomorrow or even later that day. And second, you want to pay close attention to the valid through date, because if you don't close on your home purchase by the date indicated here, you will most likely lose that interest rate unless you pay an additional fee, usually in the thousands of dollars range, to keep that rate. Moving on to loan terms, we see the loan amount listed at $162,000, which you will subtract from the sale price to determine how much your down payment will be. Looking to the right, we see, can this amount increase after closing? And you want to see no here. Next, we see the interest rate listed, and this is a fixed rate loan, so it can't increase after closing, but if it were an adjustable rate loan, the answer here would be yes. Now we have the estimated monthly principal and interest payment, which does not include your property taxes and homeowner's insurance. Below that, you will see any prepayment penalties or balloon payments, which are associated with high-risk loan types, and you generally don't see these around much anymore. And my advice to most home buyers would be to avoid these types of loan products. Under projected payments, you see the principal and interest amounts listed, as well as the mortgage insurance and the escrow amount, which we'll touch on in the very next section. On the right, you'll notice 2 columns, years 1 through 7 and years 8 through 30. This loan estimate is broken down with these additional columns because there is a mortgage insurance premium associated with this loan because the down payment was less than 20%. The years 8 through 30 column shows the updated payment amount for when the homeowner has at least 20% equity in their home and the mortgage insurance premium is removed by the lender. Now, if you're putting 20% down on a conventional home loan or using a VA or USDA loan, you won't have a mortgage insurance payment, and so you won't see this additional column. Below the total monthly payment, we see the breakdown of the estimated escrow amount listed above for the property taxes and homeowner's insurance payments. When you see yes listed under in escrow, that means your lender will collect these payments with your total mortgage payment and pay your taxes and insurance bills for you. Under closing costs, you see estimated closing costs, which are broken down into loan cost, other cost, and any lender credits. You also see the estimated cash to close listed, and both of these figures are described in detail on page 2, so we'll dive into both of them there. At the top of page 2, we see section A, the loan cost. These are the costs paid directly to the lender to obtain your loan, and it's important to point out that none of these costs can change. Also, the costs in section A are the only costs that your lender has control over. The additional loan costs you'll see in sections B and C below are required for your loan, but paid to third parties, not to your lender. Another important point to mention about the loan costs in sections A, B, and C is these costs would not be required if someone is purchasing their home with an all-cash purchase. So the costs listed in the next 2 sections only apply to home purchases that are financed with the home loan. Under the origination charges, we see 1/4 point listed, and this is sometimes referred to as a discount point to lower your interest rate. Next, we see an application fee, the underwriting fee, and it's worth mentioning that some lenders will break their fees down individually, like this loan estimate is done, and others will just list a total origination fee. In either case, this is where you can see exactly how much your lender is going to charge you for your loan and your interest rate. Under section B of loan costs, you see services you cannot shop for. They will generally include things like your appraisal fee, credit report fee, flood determination and monitoring fees, tax monitoring and research fees. I will also point out here that since you cannot shop for any of these services, none of these prices that you see listed here can increase at closing. Under section C of the loan costs, we see the services that you can shop for. These include fees for pest inspections, surveys, title insurance to protect the lender, which is always required. And I'll point out here that the 4 title line items that you see are part of the lender's title insurance, and it's separate from what's referred to as the owner's title insurance, which is for you, the buyer. Owner's title insurance is listed in the other costs section on the right side of the page. Now, the difference between the lender's and owner's title insurance is just like the names imply. The lender's title insurance only protects the lender's interest if there are problems found with the home's title in the future, and the owner's title insurance only protects the homeowner. Another point I would like to make regarding this section is you won't see a home inspection listed anywhere on this loan estimate because it's technically not required for your home purchase. However, it's always advised you have a home inspection performed, and they usually cost somewhere around $500 to $700 depending on the size of the house and the scope of the inspection. One final point on the services you can shop for section is if you use a service provider recommended to you by your lender for these services, the prices listed for these services could only increase by an amount up to 10% over what is originally estimated. Now, section D adds the total loan costs from sections A, B, and C, and like I mentioned earlier, these costs would not apply if someone was buying their house with all cash. The costs we will see in the other cost sections will apply to all home purchases, regardless of whether they are all cash or financed. Going back up to the top right, we see other costs section E, taxes and other government fees. The recording fees listed here are charged by the county the home is located in to record the mortgage or deed of trust under the buyer's name. Depending on the county you live in, transfer taxes may or may not be applicable. Other costs section F is for prepaid cost. Here we see 6 months of prepaid homeowners insurance. However, normally lenders collect a full 12 months. Prepaid interest is the amount of daily interest you will pay from the day you close on your home purchase until your first mortgage payment starts, and your lender may also choose to collect prepaid property taxes as well. Other costs section G is the initial escrow payment at closing. Lenders are allowed to collect payments in advance for things like property taxes, homeowners insurance, and mortgage insurance. And you might say, wait, didn't you just tell me that the lender would collect 12 months of homeowners insurance in section F? Why are they going to collect another 2 months here? Well, if you have an escrow account, they are allowed to collect up to 2 months in advance for things like insurance, taxes for the following year. Section H is for any other cost, and we see the owner's title insurance is listed here. One thing worth pointing out regarding the title insurance is that unlike homeowners and other types of insurance that you pay every year, you only pay the title insurance premium one time at closing, and then you are protected from any problems that arise relating to your home's title for the life of your home loan. Section I sums all the other costs for E, F, G, and H, and section J is the total amount of all your loan costs as well as all other costs to give you the total amount of closing costs you will pay. You will also see any lender credits listed here as well. A quick note here on lender credits. Just like you can pay a lender an extra fee to buy down your interest rate, sometimes you can also take a higher interest rate from the lender and receive a credit from the lender towards your closing cost. This is an option some home buyers go with if they don't have enough cash on hand to pay their closing cost out of pocket, but they still want to buy a home. Page 2 wraps up by calculating the cash to close, which takes into account your total closing costs from Section J, adding the amount of your loan's down payment, and subtracting your earnest money deposit that you submitted to escrow when your offer was originally accepted, subtracting any seller credits, and adding or subtracting any other proration amounts that might be applicable to arrive at how much money you will need to bring to the closing table. Moving on to page 3, you see the loan officer's name, contact information, as well as their NMLS ID number. By the way, you can look up your loan officer with their NMLS ID to see if they've had any disciplinary issues in the past by going to www.nmlsconsumeraccess.org. I'll put a link in the description section. Below the lender section, you see how much you will pay in principal and interest on your home loan in the first 5 years. Next, you see your annual percentage rate, or APR, which is the total cost of your home loan expressed as a percentage. The TIP, or total interest percentage, is how much you will pay in interest over the 30-year life of your loan. The other considerations section lets you know your rights concerning the appraisal, loan assumptions, and informs you that you will be required to maintain homeowners insurance for the life of the loan. This section also addresses late payments, refinancing, and whether or not your lender plans on servicing your loan for its duration or selling it to another lender in what's known as the secondary mortgage market. So that's a wrap on the loan estimate. I know that was a lot of information in a really short amount of time. In the Navy, we call that the fire hose method. But if you have any questions at all, please feel free to give me a call, text, or email. You can also leave any questions in the comments below. I answer every single comment I get, so thank you very much for those. Thanks for watching, and I'll see you guys in the next video.